Haag Sherman is the Chief Investment Officer of Salient Partners. And Haag, great to see you again.
Good to see you.
I know that your firm owns shares in Transocean. Have you changed your holdings at all in reaction to this?
We have not. I think that looking at Transocean, today Transocean's selling at about 5 times earnings. They've taken about a $5 billion hit due to this crisis. Yet, if you look at what their true liability is, their liability relates to tort law. They don't have any liability as it relates to the operation of the rig. That's BP. And so their liabilities really exclusively relates to the rig damage, a total loss, which they have insurance for, and in addition to loss of life, which is substantial, so they will have liability there. So I think that the market has clearly overreacted to what the damage to the ongoing viability of Transocean business is.
Right. Okay. So in other words, it's pretty contained. But hey, I want to get back to that in a moment. I just want to tell our viewers, though, that ADP report just came out moments ago. 55,000 is the number there. The survey called for a creation of 70,000 jobs. So this number is a little bit worse than expected. The markets right now, equity futures not really reacting too much to this, but it is a worse than expected number. However, the revision in the prior month is higher than expected for a gain of 65,000 jobs. This is the private employment report. So you could take sort of a good and a bad from this data point. I want to get back to Haag to talk again about BP. And, Haag, you raised some very good points about, the containment of these costs for Transocean. But you've got the moratorium, right? And that is an unknown.
That's exactly right.
That is an unknown.
That's an absolute unknown. And I think really what I'm afraid of is that the reaction to this will be a 3-mile island-like effect, which really had a dampening effect and almost abolished or eliminated the nuclear power industry in the U.S. for a 30-year period of time before it's received an increasing note of late. If you look at the Deepwater Gulf, you have these deepwater floaters that Transocean operates and others. If there's this long moratorium on these deepwater floaters, they're going to move them elsewhere in the world. And it's going to be extraordinarily difficult to move them back to the deepwater region of the Gulf. So this 6-month moratorium, if they believe that it's going to last a whole lot longer than that, will have a significant impact on the deepwater drillers and where they deploy their vessels going forward. Well, so it's going to be clearly a revenue loss for Transocean and others, but longer term it could have a significant impact on drilling activity in the Gulf.
Do you have an estimate of how many could actually move out of the Gulf if this takes longer, if this moratorium takes longer?
Well, I mean, that's uncertain. Transocean has 12 deepwater floaters in the Gulf of Mexico, a day rate of about $400,000 to $500,000 apiece. So you're talking about $500 million in lost revenues for Transocean alone. How long will they continue if it looks like that moratorium is going to be indefinite? We don't know that. They probably haven't even assessed that themselves. But those are the questions their management team is going to be asking going forward.
Right. And Haag, with each answer raises more and more questions. But I've got to let you go. It's been great to talk with you and to see you again, Haag Sherman.
Good to see you again.